2022 was a very challenging year for the European investment fund industry. Both UCITS and AIFs registered net outflows and a substantial decline in net assets. UCITS had a decline of about 13.4% and AIFs declined by about 11%. However, the bulk of these declines were not due to net outflows, but were due to the unprecedented decline of both stocks and bonds. In the UCITS market, it was mainly the equity funds and bond funds that registered net outflows. Especially bond funds did particularly bad. They had their worst net outflows in a decade. That was due to the sharp rises in interest rates, which resulted in a decline in the attractiveness of existing bonds. In the AIF market, we also registered net outflows. This was due to one country, the Netherlands. In the Netherlands, AIF pension fund wrappers switched to mandates, resulting in net outflows. Without the Netherlands, we would have had net inflows in AIFs in 2022. However, it was not all glum news in 2022. Two segments of the market did particularly well. The first were SFDR Article 9 funds, funds with a sustainable objective. They registered net inflows in every month of 2022, which was particularly striking given that a lot of Article 9 funds were reclassified to Article 8 funds in the second half of the year. The second segment that did really well were ETFs. They registered solid net inflows, whereas most of the overall long-term UCITS registered net outflows. It is often noted that the European fund industry has too many small funds. There are indeed a lot of small funds. There are about 1,500 UCITS funds that are smaller than 100 million. However, if you look at this portion, at those funds in portion of the total market size, they represent less than 4% of the market, with a declining share. Larger funds, funds larger than 1 billion, have actually an increasing share. Another trend is the decline in costs. The average cost of UCITS continued to decline over the past 5 years, and this is a decline across the board. Active passive funds, equity and bond funds. For example, equity funds saw their average cost decline from above 1% in 2018 to 0.87% in 2022. This trend we expect to continue, as there will be increased transparency on fees and an increasing competition between asset managers and between active and passive funds in particular. The European investment fund industry is becoming increasingly international, and this is both funds sold in another European country and funds sold outside of Europe. The market share of these two types of cross-border funds has increased, and this indicates both the vitality of the single market for UCITS and the success of UCITS as a global brand, as they are being sold in Asia and South America. Insurers and pension funds are the largest type of investors in investment funds in the EU. At end 2022, they held about 4.2 trillion worth of investment funds. Households are the second largest, holding about 3.2 trillion. Encouragingly, in 2022, they actually bought investment funds. Despite the steep fall in stock and bond prices, households bought about 88 billion worth of investment funds.